G'day guys, welcome to another episode of the Pumped on Property Show. In this podcast, we actually do a live strategy session with Simon because both him and myself have been feeling a heap of FOMO at the moment. We've been really both thinking about our next steps, whether we invest, whether we sit out of the market for a little while and wait. And so we actually decided to go through sort of where Simon is now, his 12-month and his longer term goals, some of the challenges he's facing, as well as a few of the ideas that he has. And then looking at history and looking at our own experiences, as well as the things that we've learned from talking to over 7,000 investors and sort of getting right into the nuts and bolts of a few different ideas.
Now let's hope I can take my own advice after the strategy session today, because there's just so many great opportunities out there at the moment. And obviously I want to jump on every single one of them, but I'm not in a financial position to do so. We try and navigate which options seem the most logical, which options are in alignment with my values, with my strategy, and with my vision for the future as well. And really just trying to get out of my own way and eliminate some of those biases or some of those stories that I've recently heard from so many successful investors. And it's a bit vulnerable, a very open and honest conversation as well, because I feel as though it's the right thing to do to help people make a better decision moving forward. So let's get stuck in.
In the last 12 months, the price of Bitcoin has gone up 75%, and in the last 2 years, 285%. Gold has gone up 40% in the last year, silver 37%. Stocks in Australia and America have gone up between 7 to 9%, and even crude oil is up 18%. So if you're feeling FOMO, or like you've missed some of the short-term gains, then it's completely natural right now. So the reason we've sort of started the potty this way today is just, you've come in from a pretty rough night's sleep. And both of us are just feeling massive FOMO right now, which is so natural for this stage of the cycle. But you know, your rough night has sort of given us the idea to just have a live strategy session today.
Yeah,
sort of just, you know, just because we do this every single day doesn't mean we have a crystal clear strategy at all times. And there's a difference between emotion, logic, history. And as your wealth position increases, you get more and more choices that you never had. Like I talked to a client yesterday and I'm like, dude, how good were the old days when you only had a $300,000 borrowing capacity and you could buy like one thing? But now it's like you've got $1 million. You can pretty much buy any market in Oz right now.
It does make it really challenging, and I think it's just normal. Like on my way in this morning, I was listening to the last couple of chapters about the mania phase in The Secret Wealth Advantage, just to have another quick pulse check about what they say. And it is a time to manage and check those emotions, because it's just everything is going up and you feel as though you missed opportunities. You feel as though you should have done better. The old saying of every single investor on the planet, I wish I got started sooner and I wish I did more with what I had. And so you're sitting there and you're like, oh, I missed out on the opportunity. I need to try and make up for lost gains. But this is a fool's game. And I know the answers to my own problems, but at the same time, I'm a human being. I've missed out on so many opportunities in the past. Like my opportunity cost hasn't been on, you know, what I've bought. It's been on what I haven't bought. And so it's just really difficult to figure out what the hell we should be doing. And I'm having a lot of calls with clients that we've worked with over the last 10 years at the moment who are all in the exact same boat. Everybody's doing well. Everybody's sitting on equity. Everybody's seeing their super funds go up. Everybody's seeing their assets go up. Everybody's seeing their incomes go up. Jobs are plentiful in many industries. And so there's this real sense of optimism, but it generally isn't the right time for that.
You know, I want to say, just for a bit of a laugh, that this conversation and the idea for this video, literally we're sitting outside just talking about what we're going to do today, and you're kind of like, I'm thinking about doing something in like Gympie or Toowoomba, and I was like, oh, this is awesome.
We're on here.
Let's get stuck into this today, because this is what happens. Like, you know, there's not as much value in Canberra, Hobart, Sydney, parts of Brisbane. There's still very good options in Brisbane. There's not as much value in Perth anymore. There's not as much value in parts of Melbourne. And so it's kind of like, well, where do we look? And then it's like you start looking at history and, you know, going into some of those regional markets just before the boom. and then crash. And, some of them looked really good in 2007 or 6 and 8.
Yeah, some of these markets were going up, 15 to 20% per year in the final years leading up to it. But then basically every single one of them crashed and then sat flat, especially like a lot of the regional markets like a Hervey Bay or a Toowoomba or a Gladstone. These areas like didn't even keep up with inflation for 10 years.
Yeah.
So it's like there's huge risk with these speculative investments. And property isn't the type of game that you want to do short term, but you hear these stories of what other people are doing and you're like, you just get the FOMO and it's like, I can do it. I can do it. And it's like, the choice is like, you take the punt, you succeed, you put yourself in a better financial position, you're able to expose yourself to more investments. Or you take the punt, you fail, and the house of cards comes crumbling down, and there's such a psychological impact on that as well.
That's interesting, and we'll get into all of that today, but let's do a live strategy session. Now, Obviously, we don't want to, go into your financial position because we're not financial advisors and because it's personal stuff. But what we will say is you work here and you earn good money.
Yeah.
As for the lifestyle especially. You've got your own home. You've got one really cool property that's got potential maybe in the future down on the beaches of Brisbane. And then you've got one half of a duplex left in
South Brizzy. Yep.
So we're sitting in a position where you've got 3 properties, good equity, good income, and with the sale that's coming in shortly, like a pretty decent amount of cash in the bank as well.
Yeah, exactly.
And so let's just say that's the situation. Like, what are yours and Taylor's goals for the next 12 months? Like, where do you want to be 12 months from today?
12 months from now is just to enjoy our life. So, we've got a young 12-month-old baby at home, and we hope to start trying for a second baby at some point within the next 12 months. So that means keeping the stress a little bit lower and obviously freeing up a little bit more time to spend with the little one, because obviously when a second one comes along, I'm not going to have as much time to be able to focus on him. So it's really about family for the next 12 months. But I also feel as though the next, not just 12 months, but 18 months represent an insane opportunity for investments as well. And I think over the next 18 months, I don't necessarily believe that it's going to be as good as the 2021 boom, but it will be that good in some areas, in my opinion.
Yeah, like I'm watching some of these suburbs in Melbourne and Brisbane go up 10K a month right now. Some of them in Melbourne are going up 25K a month. Like, there's incredible value.
And I'm not just thinking property. Like, I think Bitcoin will continue running, gold will continue running. There'll be some stocks that continue running as well. So I don't know anything about that space. So I'd obviously have to lean on a team of advisors and some mentors to help navigate that space. But, obviously those assets are a bit more liquid than real estate. So there's options there as well. But
if we were both sitting with a client right now, I'd go, that's beautiful that you want to spend time with your family, surf more, travel a little bit, but what do you really want financially 12 months from today? Like, where do you want to be? How would taking another step set you up for the better? Like, what type of cash would you want at the end of 18 months' time? Obviously, as much as possible is the lizard brain answer, but what do you actually want?
Yeah, I think in terms of like return on investment, it'd be good to, if I do a short-term speculative project, it would be like, and this is ambitious, but like at least a $200,000 net profit over an 18-month period, which is like risky, because to do that and to generate that type of return, you got to take a pretty big punt.
Okay.
So it's kind of like looking at the short term and going, okay, well, how can we get ourselves into that position? Because that 200 grand is then going to give me more money to be able to invest when I feel as though the stock market will drop in a few years from now. And then I can obviously maybe take advantage of that opportunity. Plus, obviously, put myself in a better financial position so that when properties drop, I've got more access to cash, because I know during those more challenging years when the best opportunities to buy are available, it is so difficult to get finance. And the banks are going to ask for big deposits, and they may not even want to loan to a single income family.
And so looking at the bigger picture then, like, what's this all about for you? Like, where do you want to be 5 to 15 years from today? Like, what's the North Star?
5 years, I'd love to upgrade the principal place of residence on the Sunshine Coast in Curramundi. So just getting
to the beach,
a little bit closer to the beach, and just a nicer, bigger home for our family as well. Like we got a nice home at the moment, but it is small, and obviously as the family grows and as we just to accumulate more stuff, I feel as though I need to rewatch that minimalist documentary.
Mate, welcome to having kids. If you don't want to accumulate, then birthdays, Christmases, and then grandparents just
Oh.
giving stuff, and then friends just being like, I'm coming around for a coffee. Here's like 3 bags
Yeah,
of stuff.
I don't want to take it to Salvo, so it's all yours now.
Yeah.
But look, it's beautiful to be in that position. But yeah, just upgrading the principal place of residence, but reducing debt on the principal place of
So
residence at the
debt-free
same
is where
time.
we want to be by 40 on your own home,
Yeah,
at least.
I think 40 is more realistic for the principal place, especially if we do an upgrade, because there'll be a little bit more debt that needs to be paid off. So I'm 32 now, give myself 7 or 8 years. That would be the absolute goal by 40 to have my own home debt free.
Can I just say something there? Like, there's a lot of people listening to this like yourself. You could go sell your properties and be debt-free on your own home today, which if that was in our parents' generation, would 100% have been the goal. You just sell them both. You've made a monster profit on everything you've done. Debt-free, cruisy life, upgrade the home, small amount of debt. But you aren't just trying to own your own white picket fence home near the beach. You're obviously trying to set yourself up for financial freedom, security and peace. So what on top of owning your own home financially do you want? And then what type of lifestyle do you want to complement that?
I want a diverse range of income. So income from my work. So working at Pumped On Property, like generating an income through putting the hours in, like every single person has to do. I love the structure, the routine, the amazing conversations, the great team that we get to work with, and the lifestyle. So I enjoy that, and that isn't going anywhere. So financial freedom to me isn't to have an early retirement. It's just to have that safety net and be able to continue investing. So making sure that I've got about a third of my income coming through from my income. Then I want to make sure another 30% is coming through investments, and that will be a combination of property, stocks, and crypto, essentially.
Do you say let's say that your income's X, like 100K per year is the average income in Australia. Does that mean another 100K a year coming through the capital growth in crypto and stocks and property, or the actual cash flow coming out of them?
Liquid, yeah. So cash, increasing my financial position to increase the quality of my assets. So I don't need to be passive income through rent. It can be through manufactured equity and capital gains and realizing those. So one of my strategies that I'm enjoying at the moment is sort of doing splitter blocks and starting at the very bare basics that you possibly can. Like I just did probably the most affordable duplex that you could in Brisbane.
Yeah.
And
killed it.
and
because
crushed
it. Was
it.
simple.
And so going for that, and then, selling half, keeping half, and then continuing to rinse that as we go. So I love property and doing projects. So having these conversations and going like, where to next? Is it Queensland? Is it Victoria? And if so, what part of Queensland, what part of Victoria, and then what suburb, what street, what block, like figuring all that stuff out is such a game, and it's so fun.
Is it Dapto? Is it Melbourne? Is it Darwin? Is it Brisbane?
Honestly,
these are the honest questions
there's
that I'm
so
talking
many
to people about right now. And I'm, obviously deliberately writing off a couple of markets there, but it's like, at this stage of the cycle, when reading that book and you listening to it, there's a page where it's like key emotions. And the key emotions are like excitement, speculation, mania, frenzy, like anxiety, like FOMO. Like these are the things that we should naturally be feeling, because who doesn't have that mate that's just bought a house 10 years ago that's now worth $1 million more, or just sold one and like you, like gonna put a huge chunk of cash in the bank? Or we're talking to our team member that just bought an average home with our business, 7-8 years ago. He's now selling it for double what he bought it for, and then going to buy a house and then turn it into 4 townhouses. And like being around that every day, it just gets you going.
Pumped up.
Yeah, it gets you pumped.
Yeah, so I just, want to continue doing projects, and I enjoy those projects with real estate. And, there's so many different ways, but for me, residential real estate is best suited for leverage and capital growth.
Yep.
I'm not a huge fan of the yields that you can generate through residential real estate, especially if you want to own good quality properties in good quality locations. Like look at Sydney, Melbourne, Brisbane, Sunshine Coast, Gold Coast, like any good property, lucky to get a 2 to maybe 3% yield.
Can I say something that I've never heard anyone say in real estate before, but it's my new goal now. And it's like, so I've got my income, right? Like this is a job for me, the same as it is for you. And I just happen to really love it, especially when we're frothing out like
Yeah,
this.
exactly.
But I'm just gonna, my new goal is, it's been very difficult for me to articulate short-term goals in investing. My new goal is to slowly work towards making capital gains in alignment with my 200 grand a year salary or whatever. That's just a very easy marker in the sand, and it's not as abstract as going 15 years from now I want 100k per year of income, which is also a goal. I love that. Like that's a big thing that you just said for everyone out there, because it's so tangible and measurable. It's like
Yeah.
you can go buy a property or two and try and make 100 grand a year on top of your salary and growth. Like that's awesome.
Probably more attainable and realistic than the 100k passive income through rent.
Yeah, and once you've got $2 million worth of properties outright giving you 100k a year, I can guarantee you'll have a better use for those funds too.
And I think, and I actually, I don't think I know from talking to so many people that love what they do, that aren't trying to run away or have that early retirement. They're actually happy to sit in it. They're happy to work a full-time salary. Maybe they want to reduce their days per week from 5 to 4. But, you know, anybody that is willing to work until they're, say, 60 are open to so many more strategies in real estate or in any investment, because it's not necessarily about trying to realize these gains today. It's like over time, just building wealth, building more financial freedom. And if you want to capitalize on some of those gains, then absolutely take it out, pay your CGT, move on to the next thing.
I love that. So to come back to that longer term picture, your own home owned outright,
Yep.
shorter term having your investments meet your annual salary on a good year, and knowing some years that's not going to happen too.
Yeah.
What else are you working towards financially in the future?
Definitely having some form of side hustle, passive income as well.
Yeah.
So, you know,
Sailing canoes or something.
I'll probably leave my wife up to that one. She's much more entrepreneurial than I am. Her ideas are much better.
Reformers. Reformers.
Yeah, like who knows what it'll be, but you know, something that we're good at, something that the world values, and something where there's a bit of a hole in the market. So
I love that, bro.
you know, just having sort of 3 different options, because like right now, young family, single income, but you know, Tay is a harder worker than I am. Like she is so disciplined, such a hard worker. Like it's really challenging for her to be a stay-at-home mum, but she knows that it's the right thing to do for our family long term at the moment.
So she might find something cool, and with your skills, you can help her, and she can have that as her
and hopefully these, you know, investments can fund the start of her own project, because I don't think she'll ever go back to working for somebody else.
Yep.
She'll always just focus on her own organization, her own business.
Yep.
But as you know, you started this business up by yourself. It takes time and money to be able to get something off the ground and starting to get a roll.
Don't have money, which I didn't. It takes a lot of time.
A lot longer. Yeah, exactly. Yeah. And she's a bit of a fiend for ChatGPT as well. So she's got the world's best assistant helping her out at the moment.
That's so cool. So I like that, but I'm still unclear of where you want to be in the future.
Yeah, okay.
Like, I know you want your own home. I know you want a great lifestyle, but is there a marker that you're working towards, or is it the joy of the journey and who knows where you're going to be, which is how it is for me now?
Yeah, like there was those in the past. So like the past was like $150,000 worth of passive income. What's passive income? Like that's a real question that me and my wife ask one another. It's like, well, it's almost impossible to get a true passive income. So sort of just not forgotten, but just let that slide a little bit. Like it doesn't need to be this tangible 150k worth of passive income coming through investment property or whatever it might be. It is exactly that. It's enjoying the journey and going, let's not put a cap on it. Let's not go, once we get to 150, we're going to be content. It's more like, let's challenge ourselves. Let's work hard. Let's invest extremely well. Let's implement good ideas, and then just see where life takes us, because we're happy. Like if nothing were to change, we would be sweet. Like if we just held the home that we're living in, the North Brisbane investment property and the South Brisbane investment property, we're done. Like we're sweet. Like we're happy. We don't need anything more, but we also recognize that we're young. We've got a long life ahead of ourselves. we've got young kids. We would love to be able to support them financially and be able to put them into the nicer school, take them on the nicer holidays. The other day, I was going to my wife. I'm like, hey, I'm going on another weekend snow trip. It's going to cost about $2,500. She's like, oh, are you serious? Rah, rah, rah. And I'm like, yeah.
About the money or about you going away?
About the money. She doesn't necessarily care about the going away because, her mum comes up and stays with us. It's great.
Yeah.
It works out for everybody. But yeah, I'm like, Tay, I want to normalize that. And I'm like, once you and Tanner and our future, our second child are coming, like, it's going to be 10 grand for like less than a week at the snow.
And this is of key value, and the reason you're working so hard is for that experience every year.
That's right. Passion. I ran into a mate this morning down the beach who just got back from New Zealand with his family, and he's like, it was bloody expensive. And I'm like, was it worth it? And he's like, yeah, absolutely.
Cost me $2,000 for one day on the snow in Cardrona for my family, but I did need to hire pretty much everything but clothes.
That's normal.
Skiing is expensive, man.
It's an expensive hobby, but it's amazing, and it's so exciting and fun to just be like sliding down a mountain.
It's actually so crazy.
It's so cool. This like white mountain, it's so cool. So
especially
I love
how
that.
good you are at it.
And then surf trips as well. But like, I don't want to just go, hey darling, I'm leaving the family for 2 weeks to go to the Mentawai Islands in Indonesia. You'll be all right. It's like, hey, no, let's go to a resort where like there's heaps of fun stuff to do nearby, good adventure days, like hiking, local communities and shops and great restaurants and pools, and like all of that costs money, but it's like, this is the lifestyle that we want to lead. So it's more about
30 grand a year for trips, really, to do a mad family surf trip and a mad family snow trip a year. Like, and this is being realistic about what financial freedom means, and it's different for all of us.
Yeah.
I 100% want 50 grand a year for travel for my family.
Yeah.
Because I love traveling.
Yeah, yeah. And you got the 3 kids, so you need that extra little bit there as well. So that's a huge value. I only ever want to work 4 days per week as well. So like, I want to make sure that every single week is a long weekend. And then when you get the Monday, it's like an extra long weekend every now and again. Mm-hmm. And then I want to be able to take 6 weeks holidays per year and structuring those as the kids grow around the school holidays as well. But then being able to, hopefully, if the teachers allow me, pull the kids out of school when
they
it's
allow
not...
you, bro. They don't care. Hey. Until you're 11.
We'll see. Hey, some of Tay's cousins in Sydney get rinsed by their teachers and principals for taking their kids out of school. I'm like, that's heavy, but look.
Wrong school, wrong values for me.
I'll cross that bridge when I get to it, hey.
My teachers were like, at my kids' school, when I took them out for 6 months, were like, yeah, you can take 6 months off per year in Queensland and still pass the grade. So how long do you guys want?
Yeah.
Oh, that's amazing. They're going to learn so much more than they'll learn here. And I'm like, all right, you said it.
Thank you. Yeah, I'll take that.
And honestly,
maybe that's a private school thing though as well.
We got them, we got them tutors for about, 2 of them needed it for about 3 months. They caught back up and now they've like passed their age level. So it didn't even, I thought that'd be, that would be a dint forever, but it wasn't.
No, well, obviously if you're able to get the tutoring, right?
Yeah, that was more expensive than the holiday.
Yeah, I definitely felt as though I lost out when I broke my back in grade 6. Hey, I like went back and I was a dunce at maths for like all of my first couple of years of high school, But so yeah, for me, lifestyle, that's what it's all about. And then obviously that financial security to provide for that lifestyle and just continue investing. Like I just love it. Something that I'm wanting to learn more about is more so like Bitcoin, not necessarily crypto, but Bitcoin. Been listening to some really cool podcasts recently about it, and just, these experts that are right into it think it's kind of like the technological gold. And, this one guy explained it well, and he's like, if the world is like utopian and the future's better than the present and we continue this technological evolution.
It's how it will always be, by the way, long term, maybe not year to year, but long term, it is always getting better.
He's like 95% 95% Bitcoin and 5% other stuff. He's like, you need to have it because it's kind of like the old gold, but he's like in that dystopian reality where like if the internet gets shut down or something really hectic happens, like we get smashed by an asteroid and we go to living like cavemen again, he's like, well then, back to what works, gold.
The central bank just takes all of the Bitcoin and pays off the deficit in the next year, see using it. Like they did in Greece.
Yeah, like there's...
That's a real thing that can happen too.
It's a real thing, but obviously that would result in like world war and a
Would it?
massive upheaval,
Reckon that, like,
revolution.
the average like person on the ledger is
There's
gonna go do
just
that?
too many people on the ledger now.
Yeah.
Like that could have happened maybe 10 years ago, but I just think that these days. But
If
learning
they
more
can
about that.
shut the internet, they can take the ledger. This is the thing.
Mm.
Like, I still have my conspiracy theory about it. Like, I'm an idiot. I miss Bitcoin. All of my friends got it. You got it. And I missed it. And I'm like, I'm so pro this technology 100%. But it's like, I still believe that it was created by central banks and governments to introduce the idea of digital currency to be able to say after this next thing and they go, well, the printed money doesn't work anymore, which feels like part of the message they were trying to show after COVID. I'm like, did they print heaps more than they needed to go, the value of an actual currency is low and we can artificially inflate it or deflate it? And then there's this like incredible technology which the world loves now because everyone's made money without doing anything from it. And it's like, if they make money that's printed look bad enough and they make digital currency look good enough, does it go, okay, the American dollar is now a digital American dollar? And it's like, and then Bitcoin sits along that as like as a global independent dollar, but then there's an Australian digital, there's an American digital, like, which is what they want. They don't want a cash economy for two reasons: control, and secondly, how many people are still in cash businesses that they're not getting tax revenue off? They want control, and it also would stop so much crime because it's
100%.
like there's no
Well, everyone's there. Like this already happens in China. Like they can shut down your bank account if you do something that the state doesn't want you to be doing.
yeah, they can do that in Australia too. They just don't
Yeah, yeah.
because they know people
We've got
kick
more
off right
freedom.
now.
But it's heading in that
incredible.
direction, and time will tell, and all will be unveiled eventually. And hindsight will be 2020 when we look back at it all and go, "Oh wow, it did happen like that," or "No, this is going to be the way that we transact
Bitcoin
in the
got
future."
$2 million. Those guys in 2014 were right.
Yeah,
Like, imagine
yeah.
like how crazy is what's going on.
But at the end of the day, like land is what I value. And like when you read Phil Anderson's work and you understand economic rent, and regardless whether it's like gold or Bitcoin or, whatever other asset, essentially people are always going to use that to get more land because land is, I guess, the most finite resource that we actually have.
Yeah, and it's always found its way back in. Like the big gold booms ended up in land. The crypto stuff, like we're working with people every week now that have made this or that in a different commodity. Could be gold, bonds, stocks, could be crypto, could be a different coin, an altcoin. It could be those cards that people, like, literally working with a
NFTs.
dude that's just crushed it in Pokemon cards
Yeah.
and buying those boxes and selling to people. And but it does, some of those guys want diversity, like you want diversity in the stocks and crypto, and I want diversity in commodities and stocks. Like, it's like 100%.
Yeah, choose your poison and choose your beliefs, and then just go give it a crack. Because like, you don't want to be that old dude at the party that just reminisces on all the missed opportunities in the past, right? Like
The good old
I'd
days,
prefer to
all
be
the bad ones.
sharing lessons and scars from, making bad decisions, and then lessons of, making great decisions and it working out at the end of the day as well.
Remember Toowoomba 2026? That was a good lesson.
Yeah, I'll tell you.
Um,
So the options.
So what, at your stage, right? Like the next part of our strategy session would be, well, what's been holding you back from achieving your goals until now?
Yeah.
But it's not,
for me.
you're not time poor.
No.
You're not struggling with analysis paralysis, really. Like, it's your choice paralysis. You're not necessarily like got information overload. You have a strong team of advisors. Like, you have a plan. You know it's the right time. You know what the right markets are. So there's a lot of things that like don't work for you. But for you, like, what kept you up last night?
You can't do everything. And I feel like I've been doing everything for the last 12 months, like, becoming a first-time father, going to a single income. We've always been a double income household.
All pressure on
Renovating our house at home and project managing that whole thing myself so I can save 10-20% of the project cost. And, it's all about that. And then doing the duplex as well. So all of
you
these
also
things.
renovate and sell another place as well.
Sold another house, exactly.
Went through the stress of that, which we won't talk about on camera, but anything that could happen happened.
Exactly. Horror story for most people that would steer probably 99% of investors away from property.
Yeah.
Same
Might
things
talk
have
about that
happened to
in the
you.
future.
And
So if you
and
just think about that for a second, like that is so much
and it's
intense
not
stuff.
and I agree. I'm not time poor. Like I've got the time to do it, so I'll never use that as an excuse. But it's
They're all
just a
real
lot of
things.
different things to think about, and money was tied up. Like cash had to go into the reno. I didn't finance the reno. I used cash for it.
Same with renovating the investment. Same with funding the duplex. Like it's expensive
And so
stuff.
I didn't have any liquidity to be able to do that. Like I legit just, the banks wouldn't allow me to because I'd done all of those different things. So now I've, finished the duplex, almost finished the renos, sold 2 properties. I'm now finally back in a position where the banks are going to open the door for me. And I'm at this decision point where I believe the next 18 months to 2 years are going to be some of the best times that I've experienced as an investor over the last 8 or 9 years.
Can I just interrupt there? And I'm sorry to do that, but you're on cash, you're on equity, your LVR is extremely low, your income's good and relatively stable. Your
I hope so.
yeah, we'll see. It'll be a boring podcast if it's just me, bro. Far out. Oh my gosh. Hey Simon, what do you think? Fuck, this is really awkward.
What
now.
is it? The Sundays at Bernie's or whatever. You just get like a doll over here, a mannequin.
Ben's just fully. We thought he was gonna, but he's fully lost the plot finally. But yeah, like all of those things are like many people listening to this, right? Especially those that are in their 30s, 40s, 50s. It's kind of like things have been good for anyone that has invested or had a job in the last 10 years in Australia. And so,
14 years.
and where I was going with that is you're in a great financial position, but you're aware that things might not be as bright in the next 3 years or 2 years or 1.5 years as they are today. And so you're like, do I continue to take action now based on my position and play the model that's worked out for everyone that's ever achieved wealth for their family or themselves? And that is time in the market and not worrying about the bumps and bruises of what happens? Or do you sit out and wait for this like illusionary, is it coming, is it not coming? Is it coming in 12 months? Is it like one of the past cycles that isn't coming for 3 years? Is it coming today? And just not knowing, and that uncertainty around the timing makes you go, well, I'm young. Can I buffer both outcomes if it goes really well or if it goes really belly up?
Yeah, and that's where I think like the type of investment is what's going to dictate that at the end of the day. So like getting something where you can manufacture some value. So that would be a part of the strategy regardless of where it is.
You've got to make upside on this thing.
Exactly. So being able to like turn one property into 2 properties. And then, after doing that, your worst case scenario is you rent both of them out because you've got 2 rental incomes. You're generally going to be in a better cash flow position. And if you do a project like that, there'll also be some depreciation there. So it's like in those hard times, having a dual income property or 2 incomes from the one investment is going to buffer any potential downsides.
Yeah.
So just making sure that I can manufacture some value, but it's like, I know Southeast Queensland is so hot right now with so much opportunity. And, in my personal opinion, probably going to be one of the top performers, if not the top performer between now and the peak of the cycle. But then there's underlying fundamentals in Victoria that are unbeatable in the country right now. And it's like, well, that's what
10 years, like that's the one.
But then it's like, that's a minimum 5 to 10 year play as well. And it's like, is that going to excite me enough about this period of time? So obviously, if I was to take my own advice, it'd be like, focus on what's worked, focus on long-term gains. Don't try and speculate in real estate because that's a fool's game.
I was starting to get bored by about property 5 and 6, which is exactly where you're at now. And that's when I made some of the worst decisions of my journey because I was like, I didn't follow fundamentals and what has worked for every single person. I went, I want to learn. I want to grow, buying and holding, which is the thing that's doubled your net worth now. It's not the renos or the duplex. It's just holding at the right time of the cycle in the right markets and then sprinkling on some of that beautiful stuff at the top. It makes the return even better. But, also just buying and holding another asset would do the same thing too. And so it's like what are some of the ideas that you have for this 18 to 24 month period to really squeeze and rinse the top of the cycle in this speculation? And this speculation right now, we're talking about this off camera, it is natural for it to occur.
Yeah.
It will generally occur in the new technology first, Bitcoin. Now it's like, oh man, I don't have 180K to go buy Bitcoin or whatever it is, Aussie. I don't know the
Yeah,
prices.
it's around about.
And I don't understand gold, and the stock market's been pricing itself properly. So the stock market's it's going sideways or a little bit up, outside of like the technology stocks. And then it's like, well, what is there for me to go and do then? And I think, property
There's a
is
lot.
one way back. So what are you thinking?
Like, there's a lot. Obviously, there's great infrastructure coming into the Sunshine Coast with the new train. That's going to go into Caloundra. There's new zoning in the 4551 postcode of the Sunshine Coast, which allows people to buy properties and do projects like
Crazy cool
subdivisions and
stuff. But that's
townhouses.
sort of 14 to 18 months away before it's even been rezoned. And so that's a 3-year project, really, any of that.
Exactly. But you need to buy it now before agents and the market realizes
What it
the
is.
increased value of the price per square meter, and you have to pay a premium for it. So you can essentially land bank it today,
Yeah.
buy the site today, but that's $1 million minimum.
And also hoping that what they're proposing comes through. Like, this
Yeah.
is still up for public consultation. It's not like in law yet.
Yeah. Fortunately, I've got a few connections.
It could
and that'll
be,
help.
yeah. We just did hire a town planner in the office that's been doing this on the
And-
coast for 20 years, and maybe she knows a thing or two.
My mates from the surf club is like the local member there as well.
Oh,
So
cool,
like
I see.
he's the one that has to stamp the approval.
Okay.
So I'll just get him drunk one night and grab that
If it
stamp.
only worked like that.
Probably does in some
Yeah, it
instances.
probably does.
You see those high-rise apartments on Point Cartwright, or like someone did something dodgy there back in the
Man,
day. eh?
everywhere I look on the coast, I'm like, oh, how many years
did
has that
that?
guy had? And then what handshake did it come with?
Yeah, exactly.
That one down at Kiwana at the moment where it's like residential housing and then this
Boom.
10-story
Yeah.
building on the beach.
It's just wild, which would be nice to own one of those. Like, great spot.
Sick spot.
But yeah, like that's $1 million minimum, like 1.1 realistically, and then you got to factor in stamp duty and everything else associated with buying the property, and
And
you're
that might be
only
what, like a 1 into 3 you're thinking for something like that?
yeah 1 into 3 or 4 ideally,
Yeah.
and that's only going to rent out for $600, maybe $700 a week, so it's going to cost about 30 to 40 grand per year to hold.
Yep.
So that project is just pure emotion, and like I would love to own properties in those locations because I just see value, but it's something that I couldn't afford to do by myself.
And that's a land bank, and you might be deep in a GFC by the time you get to realise this.
Yeah.
And we know what happened to the coast last time.
Yeah, exactly. And then it can sit flat for a long period of time after that.
So the idea of like a medium-term horizon with a big injection is sort of a no.
Yeah, exactly. So I've got to the point where that's a no. This is where I
We'll be
landed
kicking
this morning
ourselves for them down the line, but they...
at 4:30 in the morning. So
Yeah.
and then next was sort of like going, okay, well, Southeast Queensland could still be the option, anywhere from like, and this is like crazy speculation. So I'm not necessarily advising any of this stuff. It's just what's been going through my mind. Like the title that we wrote that we're probably going to change is Simon's Crazy Mind, the end of cycle greed, mania, and psychosis.
ChatGPT will make it nicer.
That's what it sounds like. GPT, far out.
What is it?
GPT.
GPT.
Yes, you'll get there eventually. Anywhere from sort of Hervey Bay down to like, Gold Coast region, I think on the outskirts, like the right outskirts, like I don't love personally, obviously for this particular option, anything that's expensive. So it's like, how can you find a joint for between sort of like 500 to maybe $750,000?
So Gympie, Tin Can, Harvey,
Toowoomba,
are sort of your options, really.
Ipswich, those right outskirts of town. And, you look at the last 12 months, every single one of these areas has seen the highest capital growth rates in Southeast Queensland. So they are the hot spots at the moment.
They're
and
what people can still afford, so that's where people are getting them.
Exactly. And same thing's happening in Melbourne, same thing's happening in Perth, same thing's happening in Sydney right now, because everything where you would prefer to buy is so expensive that you can't afford it.
That's right.
Unless you're willing to partner up or unless you're in a very strong financial position. So even that, I'm like, doesn't align with my philosophy as an investor. I'm a medium to long-term guy. That's always worked. I like to time markets. And I feel as though I could time quite well, but I just, once you factor in entry costs, holding costs, and exit costs, you really need to be making a big profit margin to be walking away with a meaningful net profit over an 18-month period of time. And you hear these stories of outliers, but I've been fortunate to talk to thousands of investors, and I've heard every other story as well,
100%.
where it doesn't
Average
work
story.
out and you spend all this time and all this money and all this stress, and then you walk away with a small net profit.
98% of this is the actual data. 98% of long-term investors over the last 30 years, like long-term property developers, have gone under.
Yeah,
Professional
that's
developers.
crazy.
That's how dangerous this game is. Like Juniper, those guys on the sunny coast went completely bankrupt in the last GFC.
Yeah.
They're some of the biggest dogs in Australia. Like
Wow.
it's not. It's
98%.
it's not the profitable project that gets you. It's the one that you don't see coming when you try and be a bit speculative.
Which I think that's a sunny coast option in that scenario as well, because it's so expensive. But even if I were to do one of these outskirt ones, after doing it, just renting them both out, it's going to be in a positively geared position up to about a 6% interest rate anyway.
Yeah.
So it's like, that's, in my opinion, something that I could probably justify to hold through till the Olympics and know that over the next 7 years, you've got to make an incredible capital gain on that as well.
And then you're coming back into long-term hold, and so it's like, is Brisbane that's gone up 70% in the last 3 years versus Melbourne that's done 0% in the last 3 years the better medium-term hold? And that's the question we're getting asked every week, and I'm like, I don't know the answer to this.
Neither, because we don't know how positive the Olympics is going to be for Brisbane. If history repeats, Melbourne it is. But because of the Olympics, we don't know what that's going to do.
I think exposure to both markets is smart.
That's why
they balance it.
Exactly. So they're sort of the southeast Queensland options, and that's probably like buying a knockdown, renting it out for a period of time until I'm ready to do it. I don't
splitting it into two and then flogging them off. Would that be the plan?
Yeah.
Yes.
Maybe holding one. Maybe holding one if that makes sense.
Yeah.
But staggering it to avoid paying too much CGT in a single year.
What are your thoughts on a long-term portfolio of 300 square meter blocks with smaller houses on them as what you end up keeping? Or are you just sort of saying keep it
Depends
for
where.
a couple of years and then sell them type vibe?
Depends where. You know, so like we were just looking in Kelvin Grove before we jumped on this one, which is like 3Ks from the Brisbane CBD. Basically every single property was on a 250 to sort of 400 square meter block of land. Everything's been subdivided there. 3Ks from Brisbane. I don't give a rat's ass that it's 300 or 400 square meters.
Yeah, me too.
If it's like beachside Sunshine Coast, beachside Gold Coast, inner city Brisbane, beachside Brisbane, inner city Melbourne, inner city Sydney, beachside Melbourne, beachside Mornington or Geelong, beachside Wollongong or Newcastle.
The values in the location.
That's it. You know, more than happy to own those smaller pieces of land. Absolutely. But I want brand new properties on top of them.
Yeah,
I want beautiful, brand new, double, triple story, like higher depreciation, high quality tenants. But then if you're going for these speckies, it's more, I'm kind of more leaning towards the medium term because my goal to come back to the long term is like using these small, medium term speckies to be able to increase the quality of the long term assets that I hold.
Love that. And what other ideas do you have?
Well, it's just following our advice as a business and a buyer's agency, which is to go and buy an epic undervalued house in Melbourne.
So sitting on it with another 5 to 7 year idea again.
You know, and just copying the opportunity loss over the next couple of years in Brisbane or southeast Queensland, because I personally believe that it will be stronger percentage return on investment in southeast Queensland compared to Melbourne. But you'll still see capital gains down there. And so, yeah, like just buying the same thing, like buying the house, the crappy 3-bed, 1-bathroom house on the good block of land in a great suburb. You know, it's probably about 20 suburbs that I really need to dive into deeper and figure out which one of those 20. There's some in southwest Melbourne, there's some in southeast Melbourne, there's some down in Mornington, you know, definitely want to look in Geelong and out towards Melton even as well. Like really need to figure out what down there in terms of the suburb selection, because I'm not ready to make the decision.
Yeah, this is ideas.
This is ideas. And then, buying something that I can rent out for a couple of years and then coming back and choosing whether you bulldoze and start from scratch or do the battle axe style subdivision,
So
which is a lot
something with
easier.
the duplex, which has worked so good for you.
Yeah.
Like it really is about an extra 30 to 50% cream
Yeah.
7 years from now once the market's done its thing.
Yeah, exactly. And
I love that.
yeah, so that's sort of the options, right? And that's, both are probably going to end up being that medium term hold worst case scenario. I don't think anything's necessarily going to happen in the short run, but I just, there's always that mind and that FOMO and that greed and that, I've done it so I can do it again. The
Sure,
recency
that's
bias that I have from investing and generating
doing
good
well.
return, like every single person in the country's done over the last 5 years.
So what about the two other options? One is your own home and doing the duplex on that, which you absolutely could complete the next 18
Now,
months.
whenever I want.
Yeah.
Yeah.
Where's your headspace on like that? Because okay, you have a beautiful home and you've set it up so nice, but you've said multiple times that it's not your forever home. So what's stopping you rinsing that one and getting the duplex going on that and getting out of both of them in the next 18 to 24 months?
Yeah. Yes. I don't
Outside
know.
of the emotion of like it's your home, you're
Yeah.
raising your child, you've got your sauna and your lifestyle set up.
I've just got like Taylor in the back of my mind right now, just being like, yeah,
Why not doing it?
good luck.
Yeah, exactly.
Good luck convincing me to do that. So I just think like, emotionally to the family, it's probably unlikely.
The wrong time, but you've always got that for the future.
And then that opportunity isn't going anywhere. Plus then like to do that and then having to rebuy in the same market isn't necessarily what I want to be doing.
Yeah. You almost want to do it and complete it and then sit on cash until, beachside sunny coast goes down 50% in the next GFC for a couple of years.
Yeah, exactly. But then it's like, where do I live? Well, I could live with you.
Yeah. And then what happens if it doesn't go down too?
Exactly. Which is
This
unlikely.
Is the risk of, yeah.
I feel as though history will repeat. I do. I just don't know when.
Same.
So I'm not ignorant to the fact that, something's got to happen. Like there's
And I honestly didn't feel this way until gold went up 80% in 2 years and Bitcoin has gone up.
And you look at oil prices as well. Like you just see the geopolitical tension around the world at the moment, and that coinciding with the end of, or the peak in the rising stage of the long cycle, the K-wave cycle. Like it's all just positively reinforcing the research that we've done over the years, and it just seems inevitable. How that's going to
go up double in the next 10 years in Sydney or the Sunshine Coast again either, because we as Aussies will not be able to afford it and the world will speculate on it.
Yeah.
We won't be able to do that again. It just can't do that.
But I feel as though property is going to remain. But the hardest thing is, and this is the difficult thing, my conviction believes, and this is me personally, right? Like take it with a grain of salt, is that in the areas that I'm referring to right now, my personal opinion is that these areas are still going to be worth more in that crash than what they are right now.
Agreed.
And so there's an opportunity there. The second thing is during that crash, if history repeats, I will not be able to get finance to buy property in that 1 year or 2 years that I should do it.
Yeah.
And then, if history repeats, once again, it'll bounce back super quickly and I'll be paying 20 to 40% more for the same property in 5 years than what I can right now. Plus, like another thing on that is, I do believe that inflation's going to come back with a reduction in interest rates. And
we need to see wages almost double for the next cycle to start. I know that's a crazy thing to say now, but crazy wage inflation has to occur at the level of at least another 40 to 80% jump for things to sort of get back to look at the 80s period and what needed to happen there, or the early 2000s. Like, it sounds crazy now, but chippies in Brisbane are earning $100 an hour working for someone else. Like it's happened in certain industries. It just hasn't happened on everything. But
tech industry,
tech sort of jumped. So what's the other option then? Is just try and do nothing and focus on the other parts of your life that are meaningful and live those values. But
it's so hard knowing that, like, having all of that cash doing nothing that's getting eroded by inflation,
5%.
Offsetting by 5%, which, is probably going to come down over the next couple of years anyway.
Yeah.
So it may not even be 5%.
I just
We'll
got
wait and
offered an
see.
interest-only loan at 5.4 or 5.5%.
And they're still expecting another 50 to 75 basis point drop over the next 18 months.
They're
So
not giving me that if that's not at least where they're going, right? And that's not
exactly.
even fixing it. That's just like right now.
Exactly. So I don't necessarily want to be holding onto a ridiculous amount of cash. And, Akil and Phil both say that like land, and hard commodities is sort of what's going to get through as long as you don't sell in that bad year.
Cool.
So
So
it's
that's not an
hard.
option either. Like it's good.
Yeah.
The reason I'm doing this and like playing the antagonist of like asking
great.
hard questions is because it's good to know that doing nothing is not an option. Doing something that's too expensive and long term is
specky.
not an option. And maybe doing something super speculative, as good as that feels at 3 a.m. when you're like, oh, I'm seeing $200,000 of easy profit, it may or may not align. Like that's a question mark. If you can find one that really works, you're sitting on one in your own home.
Yeah, exactly.
But okay, the home's not an option either. Like I was saying this to the team this morning, and probably not in the best way, but I'm like, we're not trying to buy. Stop thinking we're trying to buy people property. We're trying to find reasons to not buy stuff so that that 1 out of 1,000 property is 100% the right one. I'm like, the concept of this for you isn't so much I can do these things. The reason for this exercise is actually I don't want to do these 5 big ones. So now I've got these 2 to delve into.
Exactly.
And that's when it becomes clearer. And then once you've got it to 1, then you can obsess about it and make that work. And that the likelihood of success is much higher when you're obsessed with one thing.
I love it so much. And it's just following the philosophy that's worked for the last 15 years for us. And it's just like, now I've eliminated 3 of the potential 4 options. Now I can explore that 4th option in more detail, more strategically, and like starting to look at the suburb data, the recent sales history, really comparing options against one another. And then, if I decide to take action, I just put myself on the board and update the team, set my property investment goals, and just say, hey, Azzy, Jody, Pam, go find me a property.
100%.
And just steer clear of it. Just don't get emotional, because if I do, sometimes I'll be like, oh, what about this one? Or what about that one? And, I'm just going to waste my own time and mental capacity and the team's time and their mental capacity.
So there's so many parts to that as well. But what I've learned about myself, right? And I wish I'm doing the action, but I know people are listening to this and not watching. But pretend like you're driving with your face over the front of, like with your hand over the front of your face. And I can partially see through there, but it's with the way that I drive anyway, it's dangerous to have 2 hands on the wheel, let alone like with my attention span. But like I'm there. Like I don't have 20/20. Now, at this stage of the cycle, no matter where I put my hand, I can see it in my peripheral. Doesn't matter where, and that's fine. Like I can operate with a little bit of excitement, a little bit of cortisol, like a little bit of like, oh, it just feels a bit different now than it did 3 years ago because fuck, I miss Bitcoin, I miss Perth, I miss Townsville. I'm getting FOMO because, I miss AI stocks, like whatever people's pleasure slash pain
Excuses,
is, like whatever we all missed in the last 20 years, like welcome to this point where it's very imminent that the $3,000 Bitcoin stocks I could have got, and I had like 100K going to my mate for them, would now be worth $5 million. And I'm like, I fucked up really bad. Like, and and I know that now, but with 2020, as you said, and so it's like, I think reducing it down to the things that could work, getting rid of as many options as possible, and then really honing in. Like for me in my own journey, and I think it'd be great for our next podcast for you to do the opposite, just because I need clarity on the same thing that you do. I'm liking the look of gold and silver. I don't know enough about them, but I like the charts last GFC for what they could be now. I like, and that's reinforced by what Akil and Phil are saying in their books. I really, really, really like Melbourne as a long-term hold. Every single part of my nature knows when there is blood in the water. I just don't miss it. Like, I think it's part of the way that we grew up. I just got a hypersensitivity to opportunities. And because our dad was sitting with us from the time we were 5 talking about business, like we just learnt this stuff young. And I can see the data, and it's not represented in the 10-year pricing properly, but it will be represented within 2 years, like what it really looks like. And you and I can sense it. And it's like, I know what worked for me in Sydney. I know what then worked for me on the sunny coast, then Brisbane. I know what worked for our clients in Sydney, then Central Coast, then Wollongong, then Goldie, then Sunny Coast, then Brisbane, which is the order we bought. I know what's working in Melbourne. If I'm thinking about the best thing I could do in the safest way, it's absolutely just taking leverage on the most undervalued assets in the Melbourne market right now or the Brisbane markets. If I'm going Brisbane, because I can afford $1 million property, it's Southern Beaches. If Melbourne, if I want to keep the budget low, 100% west, northwest, southwest Melbourne, Geelong looks phenomenal. Geelong looks as undervalued as any regional market's going to get this decade.
It's just it needs some gentrification down there. Like, there needs some population growth and gentrification, in my opinion.
I spent almost 2 weeks down there in 2023, 24, or 23. Love it.
Yeah.
It's not a Sunny Coast or a Goldie though yet. It's certainly not a Wollongong or a Newey. It feels beautiful, but dated to me.
Yeah.
It needs a pulse. Like, it needs something to happen there. Like Disneyland opening Geelong or something like that. But that,
or like 160,000 immigrants moving into Melbourne, and a lot of people wanting to move down to Geelong, get close to the beach, because it only takes you an hour on public transport to get to the city. Maybe
our speculation is at 10 million people, the Mornington Peninsula is going to be sort of like the Hamptons of New York.
Yeah.
And it's going to get so congested and busy that people are like, same as the Goldie got too full after like the hospitals and all of the infrastructure was built, and people went to Sunny Coast. And then Sunny Coast.
Southern Highlands of Sydney as well is probably another comparable option.
Another awesome option. And Melbourne has that too in all of the Yarra Valley, right?
Yeah.
Wineries.
Yeah. So yeah, it'll just be interesting to sort of unpack it. The good news is I've been thinking about these things for the last 6 months in preparation for when I'll be ready at the end of the year.
What feels right after this combo? Like, obviously there's not certainty still, but what do you think?
Well, I was going to flip it on you and just be like, look, based on what what we've explored today, like taking me out of the equation, what would you do if you were in my position?
Yeah, like the thing, you cannot underestimate what's worked for you. And so what worked was buying suburbs in Brisbane that had done 3 to 5% per year for the 10 years leading up to that point, close to the beach or the city, with 600 plus square meter blocks with cheap homes in the cheaper suburbs that are undervalued relative to the city.
Yeah.
That's what's worked. It doesn't mean it's sexy. And I'm having the same conflict. But if you were a client, 100%, I'd say duplex site under 750K in the closest.
Southeast or southwest.
100%. But there's so many other things that you know about that you can do. Like, actually, if it was me.
And this is where this exactly. Oh, sorry, go on.
If it was me, I would be doing the duplex on your home.
Oh, yeah.
That's what I would do if I was in your, because I'm less attached to my homes.
Yeah.
I was as attached as you are.
Would you buy in the same market?
No.
You just find a way to, get by over a couple of years.
This is what I would actually do if I was in your position right now, like properly. I would keep your beautiful home and go, okay, like this could be a forever home. Like, we're not saying this home is stunning. Like, it's on the biggest block, sauna, gym, outdoor pull out, perfect for the kids. Like, we're over there for family stuff all the time. You have friends around all the time. Like, it's a dream home. Like, it's the sort of thing that people in Sydney and Melbourne would aspire their whole lives to have, and would be $3 million down there. Like, and so it's like, you've really got to get a sense of like, is this forever, or do I actually want to be riding walking distance to the beach?
The biggest, so just complete honesty, and Tay's probably going, can you stop sharing so much on these freaking podcasts? But
we're not talking finances.
No, exactly. But like the worst decision I made there, in my opinion, was spending so much on the renovation that I can't justify to knock it down.
No, you're not knocking it.
So that's
keeping it.
So it would be the dream home if I were to bulldoze and restart.
Okay.
But it can't be, because we've spent so much renovating it, and now the only opportunity is to duplex it, really. And the other thing for me is,
that's
like,
not the only option. This is the thing. Like, remember Ryan from On Property used to always say to us, most of us think in this or that.
Yeah.
How can I have this and that? And that concept of like, one option in the and is you could live there forever.
100%.
Another option is you could knock it. Another option is you could just keep it as a great investment forever and never sell it. You could granny flat it. You could duplex it. The problem you've got is there's so many options. And so I'll just give you my 2 cents, and then obviously you give me yours. But if it was me, what would the front home on a 400 square meter block, beautifully renovated as it is, sell for?
1.1 to 1.2.
Okay, let's say 1.1. Let's say you built a beautiful, it has to be double story out there because there's no car accommodation. So it's going to be this walk around to it. That's not going to be everyone's cup of tea, but it's going to be someone's. And I've seen people do these in Moffat Beach, work beautifully.
Put a little gate in the back fence and got easy access
Or
to the
do that
easement.
too, like 100% just cut through there, right? And cut off that little bit.
Yeah.
Yeah. What am I talking about?
Big
You've
spot
thought
fence.
about it a lot more than me. I would go double story. Let's say you build something that feels like primo, but it's actually mid-level above investor spec. So it's like it has the high ceilings downstairs with the, nice tiling or the nice flooring, the big stone benches, the nice wall-hung vanities in the bathrooms, the semi
Sort of just mid-level everything.
To me and you, I look at it and go, I know that's like a cheaper build compared to what people can do, but to the market, they walk in and go, man, this is like architecturally insane. And you do what you did to your bathroom.
Yeah.
Actually, that is like architectural. Your bathroom's are so sick. But you do that with, because you can get pretty much wholesale pricing off our friends, you would probably do that for 500K.
Yeah.
What would that sell for as a beautiful double-story home? And I'd probably drop a pool in there to make
Yeah, a
it
little
like
plunge
mint.
pool. Exactly.
One of those round ones or something. Like really make it stylish.
Well, there's not much comparable supply on that side of Curramundi.
I think it's 1.3,
Yeah, I'd say
1.2.
yeah, 1.2, maybe 1.3, just because of the setup and like the fact that you're not going to have like a garage that you can drive into, which will hold it back a little bit. Being on the smaller block of land as well, they're the only real barriers to entry, in my opinion, is sort of those two things from getting it up to where it would be. Like if that was on the east side of the Nickland, that's a 1.5,
You
1.6
bought it for
million
how
trade.
much?
Yeah, cheap.
Exactly. So it's like it's all relative to the timing. So it's like, let's just theoretically say
Keep or sell?
that's the conversation for you and your financial advisor and accountant. But I wouldn't be keeping them.
Yeah.
And so I would talk to those guys and then look at what the Australian government says you can do, and I'd do what the Australian government says you
Yeah.
can do. And then I would end up with a monster balloon of cash because you're not just getting what you sell them both for, you're getting all of the cash that you've got currently tied in it, which is called equity right now that you can't use back. And then I would be waiting for a real estate agent who's going to go bankrupt on the sunny coast to sell their waterfront home that you really want for like 50 cents in the butt. And that's how I have gotten to the position that I'm in. It's not from
Yeah,
getting
and I've
emotionally
watched that
attached to
happen.
how many of my homes have I loved? Like I've cried
All
the
of
last
them.
3 or 4 times I've moved. I'm like,
Yeah.
what am I doing?
You didn't even want to move out of Paringa.
I still would love living there. And actually, I just found out that they're going to 8 stories in Paringa Street now.
Wow.
Paringa Street, Watala, guys, have a look at the new town plan.
Holy moly, I didn't even know that.
Yeah, this is like I was looking at the thing. Maybe it's not 8 stories, but it's big.
Wow, well,
It's
that's where
big.
all the infrastructure is going to come in with Curramundi. Like, that'll be the next big hub, Bocarina.
Yeah, it's actually definitely not 8 stories, but it looks like something bigger,
Okay.
much bigger, like apartment-y stuff.
Yeah, wow. Well, they probably could use it in that little nook there.
Yeah, it's when I was living in there, it was 85% housing.
Look at
conditions still.
Batinia, right? Look at Bocarina. They're all apartments there. So it's probably just extending it down to Watala there.
If you go down the Gold Coast Highway, you will see exactly what the sunny coast will be in 15 years. Everywhere where you see a unit, everything will be rezoned the same. Everywhere where you see duplexes and density will be the same.
Yeah.
It just has to be within 2Ks of the beach.
But the interesting thing is obviously like so for me, just playing devil's advocate and just coming back on that is like having all of my net worth tied up in a owner occupied residence and not having any other investments to fall back on is like a bitter pill to swallow from somebody who's gone from 4 properties down to like,
Which is why I would sell South Brisbane other side
Yeah.
next year, and I would replace it with a duplex site in Melbourne at the same time.
Yeah.
So I'll do them both.
yeah, in the trust that I've got it owned in that my accountant advised me to do.
You know, if you're a client, actually, I wouldn't have told you all that because I'm like, I'd
It's
be
your
like, "Don't-
choice. It's your money.
these are some ideas, but because you're my brother and like my best mate, it's like, if you want to get everything that you want in life, as Michelle Obama says it best in her book, you can have everything you want, just not at the same time. I am such, like when I was in year 12, I got into uni 5 months before high school finished by finding an article in a paper that my mum gave me and said, come down for an interview, get early access to uni, don't worry about your HECS or your HSC. And my mum's like, what's this? So we booked it, we drove down. I was an idiot. Like, I had no idea. I went in, they're like, what are you passionate about? I said, I love marine biology. I'm studying biology, earth and environmental science, geography, maths. Like, this is what I wanted to do. I wanted to be like a vet or a marine biologist or something with the environment. And then I did like chemistry, statistics and biology at uni, and I went, I don't want to be this anymore if this is like going to be most of my job. But I went down there and I got in. Now, when I got in, I had a decision, which is everyone has. Do absolutely nothing for the entire year, or because of the pressure off, see what I could do. I actually got a maths tutor, and I didn't drop a subject. I should have. Would have got way more surfing in. And I put this, I set up this little thing in my room. It was like a coffee table with some like Chinese style like cushions, and I had these little quotes that, because I find sitting down to study at high school very, very difficult to do with my nature, because I didn't love the subjects. When I love something, I'm all in. But at that time, it's like, yeah, this math stuff is like, so talk to me about home loans and offset accounts all day. Talk to me about compound growth calculators and stuff that's interesting to me, profit and loss. Yeah.
Teachers weren't the most
Talk to me
relatable
about,
either.
Algebra, and I'm like, oh, I can already see that I probably won't use this.
Yeah.
And so I had this quote, and it was along the lines of the Michelle Obama thing. It's like, do not trade what you want most for what you want in this moment. And I know delaying gratification, especially when I've just read this next book, which is like Die with Zero in New Zealand last week. I get delaying everything, and my ability, your ability, like you and I could delay for our whole lifetime and still have the most incredible lifetime, because our life isn't measured off the results we get. Our life isn't measured off the wealth that we create. Our life is measured by the quality of our relationships and the lifestyle that we have. And that's a sunny coast thing.
I love that.
People in Sydney and Melbourne be like, man, what lifestyle? I wake up at dark, I get ready, I try and get my kids out the door, I go to work, and with the commute it's 12 hours, and then I get home and I just wait for day. Like, I get the privilege of Queensland, but I would say that taught me how to delay. And for me, in your situation, the reason it's so easy for me to keep moving like I have is because I know what I want most. And everything that I've had is a stepping stone towards that. And I think before doing anything, the duplex in Melbourne's mad for you.
Yeah.
100%. That's a no-brainer. You know that Bitcoin and your crypto stuff or whatever, you haven't just been looking at it, you've been learning about that for 5 years now. Every client that comes in that's a crypto millionaire, you're booking sessions and learning everything you can. You read it, you love it. I don't know anything about it. And with your home what you really want has been clear since the day you started here. And it's like, okay, yeah, it's a sucky time of life to be building with a young kid and a wife who loves the home. And your wife and my wife are identical. It's like, it stresses them out, this stuff too.
What I said as well, though, is like, well, did you enjoy living in your family home in Sylvania? Did you enjoy living with my mum in Beltana? Did you enjoy living in the tiny 2-bedroom apartment during COVID? Did you enjoy living in the unrenovated version of our house? Did you enjoy living in the renovated version of our house? Every answer is yes. We're so adaptable. We're together. Like, there's so much more to it. But it's just so hard because, like, the biggest barrier, this is a psychological barrier for both Tay and I, is, and like, this sounds arrogant, but like, we've achieved more success than we ever thought we were going to be able to.
Already past where you thought you'd be.
So we've got to reset those, and it's really difficult to do that and like reset those expectations as to what.
Or you don't. Maybe 25-year-old Simon that went, I have to be walking distance to the beach in something that looks like this. Sometimes you and I had for years on our wall, it's the daily decrease, not the daily increase, hack away at the unessential. When I work with a psychologist, most of it now is shedding the stuff that I set between the age of 5 and 19 or 19 and 30 and going, that doesn't serve me anymore. That version of me doesn't exist. Maybe being a K to the beach in the dream spot and raising kids there is it, and you've achieved it, and you go, okay, now I'm just an investor. Let's have fun, and this is actually what I want. But if you decide that you do want the jump, my logical brain as an investor is, how do you go from what you, even if the $3 million joint comes the two, how do you jump it without $1 million of debt at that time? And so my brain is like, if you know that you actually want to do that, then it's like, how are you setting yourself so that when it does come on discount, you've got $1.5–2 million cash in the bank from what you've done in the lead up to it to go boom. And you live in one of those until you jump. Like you sell one 100% and you keep one and then you jump, because having all of your eggs out of the market is deadly. Like, how many people have we talked to in the last 8 years that are like, I'm waiting. And then I'm like, hey man, they reach out 2 years later. Remember that suburb that was 400K? Now it's 900.
Yeah.
But we've got this one now, which is nowhere near the beach anymore, at 500. Nah, that's not for me. I think I'll wait till it comes off. Sweet. Remember that suburb that was like the next best thing is now like 800. And now we've got this one at 400. Remember this one at 400 is now 900.
I'm like, to buy in Frankston for 750, to buy in
Insanity.
to buy in Melton for 550.
Seaford, bro.
Yeah, dude, for what, 800 grand? Like, it's crazy how
That would be
affordable.
$3 million in
And
Sydney.
I know that, like, people that are comparing Melbourne and Brisbane are getting it all wrong.
Wrong.
Because Melbourne is not Brisbane. Melbourne, in the 10 years leading up to COVID, was consistently rated in the top 10 most livable cities in the world. It's just, as of 2025, come back into the most livable cities in the world. It's got 5.2
It went from
million
number one
people.
to like number 10,000 and now it's back.
Yeah, exactly. But like, Melbourne is Melbourne, and I think people have forgotten that because of the scars that they've been through. Like, those scars were deep, and it's going to take a long time for those scars to heal. But you know, the market is just a bit smarter than the average person, and they're not going to take that emotion into consideration.
30 years of history. Like, this is how I'm explaining, and I love Brisbane. If you don't have exposure to Brisbane before the Olympics, you know, I'm not the one saying this. The Financial Review is going 800K properties now on average will be 1.2.
Crazy.
Some of the beachside properties that are at 800K are expected to be at 1.3 to 1.5. Now, that was a cool stat 2 years ago when it was 9 years away in abstract. Now we're like 6.5 years away.
Yeah.
It's getting...
And the median house price has gone up to $1 million.
But when I go these two cities, I go, okay, in that cool article that we found between 1976 and 2016, and you and I did what we did. We added it all together and divided it. Melbourne did 9.5, Brisbane did 9.7. In the last 30 years, according to the Core Logic article you sent me this week, Melbourne was the top performing market in Australia in the last 30 years and did almost 100% better than Brisbane over that time. In the last 8 years...
It was 459% growth from 1992 to 2022.
Imagine that's
459% over 30 years.
That's the gross growth. Imagine that if you're leveraged at 5 times that, because you're only putting 20 cents down and you're getting $1. So on the dollar, it went up 400%. But what did it do on leverage? It didn't do as good as Bitcoin in the last month, but it did pretty well. 3,000%.
But I needed this, and we've been talking about it for ages. Like, Ben, I need to sit down for a bit of a chat with you and just like roll off the tongue, you know, back and forth, like exactly what this is. And when you're like, let's do it over while we're filming, might as well, because it's good for people to recognize that we're normal investors, we're normal people that have all of these different scenarios and ideas running through our brain, and without having a team of advisors, a mentor or coach, or a community of like-minded people, you are just going to ruminate until you make the emotional decision. But now I can lean into, okay, well, let's go sit down with a drafty and look at what we can design on our home, and then take that to a builder and see how much it's going to cost, and then take that to a real estate agent and see what the final sale cost is going to be.
You can get the dude to draft it for free.
Mm-hmm.
You can get the builder to price it for free. You can take it to our 2 favourite agents town, Craig.
Yeah.
And, you know...
Sandra,
and go, guys...
plug for Sandra to Jersey. She'd probably appreciate that.
Yeah, 100%. Like, if anyone's still listening at this point, thanks, Ma.
Yeah, exactly.
We love Ma. But the thing is, you can do it all theoretically and have the fun of going through it.
Yeah.
without even doing anything.
Yeah. And then also at the same time, really dive in to go, okay, well, if I'm going into Melbourne, which 2 or 3 suburbs am I going to target?
And that's important
Because
too.
we've refined 450 down to 50, and then I need to refine those 50 down to 20, and then those 20 down to 2 or 3, because like I can't, knowing what I know, I just,
You
when
need it to be like one.
when there's too many options, there's just too many options, and that's where it's going to be hard to get the right result.
But this is the important thing. Before you choose what you need to do, you need to have these 5 ideas, and then you need to analyze those 5 ideas and reduce it to 2, which could be something cool up here, something cool down there.
Yeah.
Really, that's where
Yeah.
we've got to today. Could be short term, could be longer term. That's up to you.
Yeah.
You'll have 10,000% better success over 7 years than you will over 2, as you know.
Yeah.
The likelihood of the average investor in Australia, 60% of them lose money on anything they do in the first 5 years. And so that's just important to know that like history is against you statistically if you're doing short-term stuff in real estate. But we work in real estate, and it's not just you. There's an engineer, an accountant in our team, like physically in our office. There's me and you. There's our sister that's bought more property in Australia than probably any other female on the planet in Australia in the last 10 years. There is also a town planner in our team now. Then there's our financial advisors, our mortgage brokers, our accountants.
So there's a mortgage broker in house as well.
There's another
Accountant in house.
It's almost like we want to know everything in house, but none of them are giving
It's like
advice.
it's been serendipitous.
The town planner's not giving advice about planning. The broker's not giving broking. The engineer's not giving engineering. The town planner's not giving planning. This is just because I'm obsessed and I'm seeing the opportunity. It's like it's so much easier to walk to that person and get a third party to confirm it.
Yeah.
But if you had have reversed this and done this to me, I would really struggle right now to tell you what I want, because I'm in the exact same point as you and everyone else listening to this going, I've been lucky. You were lucky because you started investing
In 2019.
in the mid-cycle slowdown. I was lucky because I started investing in the GFC. And that just was how we were born, and when we actually came into the workforce and property full-time. And then we've been lucky to have each other and the experience from talking to like 7,000 clients now and going, that idea, that one, that's working. Like, and then talking to agents, and it's like, I just made 800K on this deal. Sweet, which suburb?
Yeah.
I'll do that duplex now, because if it's 800 now, it'll be 1.5 in 10 years time I'll make on it. But yeah, I would need you to do the same thing to me, and then I'd need to sit down and go, here's all my ideas, and you could go to me straight away, but to see it yourself when you're emotionally tied to it's very hard.
Yeah, and remove those layers, remove that baggage. It is difficult, and we are humans, we're emotional beings, so you just got to accept that sometimes and realize that sometimes the financial decision isn't in alignment with the best financial decision, isn't in alignment with the best emotional decision or household decision as well.
The worst decisions I've made personally has been when I thought I was going to make the most money in the shortest period of time.
Yeah.
The best decisions I've made when I followed fundamentals. And I think it's just so important to remember that at this particular time. Like, where do you really want to be is the right question now. Like, what's niggling at you? Like, what's coming through your intuition? What's coming through like life? To me, that would be like the messages that I get. And it's just, following your intuition and your true values on it. But like, ultimately, most people listening to this never actually have to do anything. I watched my grandma fully financially free and secure in retirement from owning her own home, one home. That'll do it. It's just, this is all play. It's not as serious as like most people would think it is.
And as I said earlier, I don't want to be that old guy at the barbecue that just talks about the woulda, coulda, shoulda, didn't. That to me seems like failure. That to me seems like I've missed out on this opportunity, and I haven't put myself in a position where I've exposed myself to good fortune by making good decisions, but also being exposed to luck, because there's a saying in The Richest Man in Babylon that the goddess of luck favors men of action. So you have to be in the arena if you want to be exposed to the luck.
You know what I think, right? And I love that. Favors men of luck. So in the last three weeks, Chris, Brian, Ray's looking around again too. Gus,
Ben just did something.
Ben. These are clients of ours that have been with us on a 7-year journey minimum,
Combined net worth of over $100 million.
at least that. But what is interesting about these guys is they bought Sydney when you should buy Sydney. They bought Brisbane when they should buy Brisbane. They bought Perth when they should buy Perth. Now they're all like, can you just get me exposure to Melbourne? These are men of action, the nicest, most beautiful people. Some of them have 20 staff, some of them have 500 staff, some of them have another 500 contractors on top of that. But these are guys that smell blood in the water, and it's almost like the canary in the coal mine in our business. When these guys are like heading somewhere, they're always heading there 2 years before the average person does, because they're not looking at this in the next 18 months. They're looking at, where will my family be in 15 years? The combos I'm having with these guys now is about family accountancy offices, where they get full-time access to planners and financial advisors, and where they're talking about, well, how do we, the combo with Chris yesterday was literally, what's your plan for your kids? Like, my plan is a long-term family trust where they can apply to the custodian of the trust in the family unit, and if they want money for a car, if they want money for a uni degree, if they want a deposit for their first home, then they can write like something substantial and apply for it, so that there's got to be some effort. And I'm talking like generations 2 or 3. I'm not making these ideas up. This is from talking to clients who work with Indian or Chinese or American family trusts that have $2 billion worth of combined assets under fund management. And I'm picking up these ideas. These are the people that come across our business, and you and I are just sponges and we're learning from them. But like, I think, anytime I'm thinking 12 months in advance, I should probably take my thinking to 10 years. And anytime I'm thinking 10, I should probably come back to next step.
Yeah.
Because I'm either drifting out in the future, dreaming, doing nothing.
Yeah.
Or I'm here right now, speculative, caught up in the emotion. I need to get bigger picture, because I'm like, whoa, I'm like trying to make cash today, and that's a deadly sign for me.
I love it, man. Thank you for spending the time and getting it out there, and we'll offer anybody a strategy session that wants to have these types of conversations to try and take the emotion out of the decision and make a better move.
The funny thing is this is like, what, 1 hour?
Yeah.
Like, our average client would spend somewhere between 5 and 30 hours physically on the phone to our team. It's like, imagine what you can uncover over the first 5 or 10 hours to get things nailed. And it's exciting. And then it's like, some people in our like some people that we work with take full advantage, and they like book the calls, and some people go, hey, which account are you using? I heard you've used 11. Like, I heard you've got a gun now. Like, here he is. Just spend half an hour to an hour with you for free.
Exactly.
And this broker that's, writing $10 million a month, not, just trying to get by for their family, or this financial advisor that just specializes in property but understands everything else. It's cool what you can do with a little bit of time, eh?
I just need to step into some action now.
Yeah, well, what are you thinking, like, before we round it out? Like, where, obviously your brain's been talking, but you're also been thinking. What are you actually thinking for yourself?
Look, if it were to take a lot out of it, I do agree, and I've had this discussion with the family about like doing the project on our house sooner rather than later. It's just a very difficult conversations to have, and the last thing that I want to do is
bring more stress in there right now.
Put her through that. So that's the biggest barrier to entry there. But like, logically, it does make more sense. But then what I'm leaning towards is probably doing something down in Melbourne as well. But I feel as though I've got maybe 6-ish or so months to make that decision as well.
And none of this has to happen today.
Exactly. So I'll probably just do some more due diligence on what it's going to look like to develop the property on the coast versus what could it look like by doing something in Melbourne. But I could even potentially look at doing both of them, because if the Sunshine Coast is a short-term 12 to 18 month specky project, there's ways that I could maybe make it work with also doing something down in Melbourne at the same time. So I could have both at the end of the day. And within the next sort of 12 months, I could potentially make both happen. So I just needed to sit down with the broker. I need to sit down with the accountants. I need to sit down with my family. I need to sit down with the builders, the drafty, everybody, and just start to go, okay, well, now I'm ready to make a decision, actually going, okay, well, what is the best decision for me? And then just leaning into it. So I'll probably give myself until the end of this calendar year. and then hopefully have made that decision and executed on that decision by the end of the year.
You know, this is the thing, right? Like I was listening to something from Huberman the other day about giving up addiction.
Yeah.
And he was talking about the chemical response, right? So this is what I would say, right? There's been, you know how I approach investing, it's very different to the average client. So how I approached this at the start was 24/7 thinking about it. And that was probably from years 1 to years 5, obsessed. Then from years 5 to years 10, I was obsessed in a different way. I was obsessed about not making the mistakes. And that's why I went so deep into history and a model that works to be like, what really works? And I don't want hearsay. I don't want to fucking hear about the domino effect.
Or the outlier.
Or the outlier, or the, townhouses and houses are the same. Like, show me data. And so we spent 5 years figuring out not what could work, what historically works, and how to pick markets and how to time them. And then the last 5 years, but as an investor through that, my first 5 years were intense, all consuming, only thought about this one thing. And then I got to do it, 60 to 100 hours a week for the next 5 because it was a job plus also full-time investing. And now it is like a pro athlete. I have a season of activity and then I have a rest season. It was at Shelley Beach where I lived on the Sunshine Coast. That was a few houses ago now, where I was in the kitchen and my wife, at that point, we'd gotten really used to talking about stuff that triggered me because she was raising children and she wasn't working anymore and she needed mental activation.
Loves having those conversations, right?
All she wanted to do when I talked about going home was like our next project and what we were doing and this reno and this project. And I remember like sitting on the kitchen bench and crying, and I'm like, you were there, like I was melting down off the planet at that point. Like psychosis would have been a fucking great word for it if I knew what it was at the time, but really it was just too much pressure for too long, and I just had, it was a realignment. It was like, I believe it was an intervention in my life to become who I'm supposed to be, a dark night of the soul, like just a breaking to rebirth
What
moment.
you had to go through to get to where you are.
And I look at it now and I said to her, I'm like, I can't do this anymore this way. Because by this point, we're like 3 kids, 2 big businesses, and like
10 plus.
15 properties under our belt. And every year, multiple projects. Like I think at that point, we're buying 3 to 5. Like it was a very activity period. And not buying normal stuff, buying knockdowns, subdivisions, Airbnbs, building them, renovating them, designing them from scratch. Like, because I wanted a passive income outside of the job, because I at that point, I hated my job because I was working 100 hours a week and exhausted from it. Like, if I could just get 200 grand a year passive income, I can let go of this business and not do it anymore. So it was all about passive income as quickly as possible. And so it changed my strategy. But the reason for that combo is pro athletes are really good at going, there is a season, and in the season, we are mentally dialed in. We don't hang with friends the same way we normally do. We don't hang with partners the same way. We're away from our family. We don't even get to train properly. Their muscle goes from 100% to like 60%. It's all maintenance, right? And it's all just hoping you get through the season with the injuries you're carrying and hopefully not having to get surgery at the end of the season. Then they have a breather. Then they go into a specific weight training to prep their bodies. And then they have the pre-season season. With investing, I now go, I'm investing again. I haven't been investing for how long? A year?
Yeah.
2 years? Because I saw value for clients that hadn't had exposure. I saw no value for me with massive exposure to Queensland already.
Exactly.
I was waiting I'd miss Perth. I'm not going to regional markets. I was waiting for Melbourne or somewhere like Melbourne. It was going to be Melbourne or Sydney to show up, right? Or a sunny coast or Goldie to look good again. So I waited, I recovered, I travelled, I trained, I rested, like I slept, I just spent time with family. Now I'm ready to go again. I'm looking, I'm learning again. I'm like, same as you, I've got Melbourne dialed for clients. I don't have Melbourne dialed for me yet. I'm testing it with other people's coin at the moment. Like,
and it takes hours and hours and hours to do that.
You know that me and you, that sit down is a 10 to 20 hour journey.
Yeah.
To get to like that dialed in. I'm going to do that for the business. So I'm like, I just been waiting to do it for the business again, because we're doing that every 3 months as a business. I just want my strategy to align with
But
what
it's
we're
been
doing.
a season of rest to an extent.
And why I brought this up, long story short, is for you, kid,
Mm.
duplex, Reno, sale, all of that crazy shit that happened on that property. Interest rates were 7%. 6 months ago, if everyone remembers, no one wanted to talk about property in Australia at all. Everyone had their heads in the sand. And we're like, there's opportunity here that everyone's missing, but that's okay. How hard you've had to work to make the last year work for the business, because it's not easy when everyone doesn't want to buy. And it was hard because Brisbane, like, average price is getting at 700K to $1 million. Not everyone can afford that. And it's like, we're not going to take them to somewhere we don't believe in. We've got to wait to find an opportunity. And I think if you look at your season, maybe the best thing you can do between now and the end of the year is nothing. Rest, recover, enjoy a normal life. Surf your head off, snowboard your head off, hang with your family before you have 2 kids, and like, 2's fucking a lot. And then it's like, okay, in the background, anytime you feel like your brain's getting wasted on like going down a rabbit hole, got a coat hanger, hey, I know, why don't I just get this plan right? That's the first step. Then get that price right.
Isn't it easy to just lean into the cortisol and lean into the thinking and the ruminating and the comparing options and having the discussions and having the chat with the missus? Like, it's almost like, for me personally, I don't know if you agree, it's easier to do that than it is to actually
Oh, I'm the king of chasing the upper.
rest.
So you're at the point, and this is why I brought it up from Huberman, you've had such a dopamine year, and every single time it goes up, it has to chemically,
level out.
whether you want to accept it or not, it will,
There's no amount
whatever
of
height,
lifestyles that are
it
going to
has
help
to,
that.
well, they do help it. That's the thing, because it's another chemical hit. It's another dopamine hit, and it starts keeping the upper. But it's also just going, well, it's okay to be exhausted and to rest now, because this isn't a sprint and without certainty. But it's okay to go, I've been getting hit all year and my hits have kept me up. And there's a whole industry which works on this, which is
Gambling,
alcohol, gambling, drugs, porn. Like, I heard Pornhub got 36 billion hits last year or something like this. And so,
kids.
or more. And so it's like and I'm the king of like the upper.
We're
like,
humans, right?
I'm an investor. Like,
yeah.
I'm basically a gambler that is putting some numbers towards gambling. Like, I don't know what the fuck's gonna happen.
Just increasing the percentage return on investment and hoping that there's less mistakes.
But I wish it. 32, you already saw my transition as an investor. I became a seasonal investor. I got it at that point. I just didn't get it in my business life at that point, or other parts of my life. But I'd just say, for those of you who have gone through a big season like Simon just has, there is going to be the crash. And in the crash, which is the uncomfortable feelings, according to Huberman, where your chemicals are just trying to get back to it normal.
Baseline.
Some sort of baseline, then it's going to be like, okay, I'm going to feel like really off and uncomfortable, and an easy way is more anxiety through more projects.
Yeah.
How much have you seen me?
Or externalities, drinking more, like chasing trips, whatever it might be.
I'm the king of it. Like, I can't say a single thing to anyone watching this. I'm 10 times more addicted to everything than anyone else. So just like, I'm an idiot.
We're normal.
Yeah, I'm like, I wish I was normal. Like, I've got normal friends. You've got normal friends. It's like and normal doesn't get you financially.
The funny thing is,
either.
Even talking about this, and like, I can hear the logic, but at the same time, my monkey mind is like, no, dude, that's not who you are. You've got to do something, and then like, you got to prove to the world that you are who you say you are. You've got to like, drink the Kool-Aid, and if you don't,
like,
you're not.
Constant progression is one of like the things that you've embedded in the last 3 years. Well, what if I'm not progressing in this every area of my life at all times?
It's such a battle. It's such a seesaw to try and balance these things. And, there's, as you said, like, unpacking all of those things that you built from 5 to 19, and then from 19 to 30, and then from 30 to 40. And then I'm sure there'll be multiple more repetitions of the same experience. And it's like, I think for me, I've been on this constant chase of like the next thing, the shiny object,
Which is
the
why at
catch up.
32,
Oh,
you're here.
you know, my best mates run a great business. My other best mates run a great business. My other best mates run a great business. My best
And they're
friends
all
run a great
tilting off the
business.
planet.
They're
Does
all
it look really good, or is everyone just nailed right now?
absolutely nailed, exactly. So it's such a it's easier said than done. You know, like it's easy to say these things, but it's hard to actually implement it. And
The
like
thing
I'm
about you
just
too, man, is your ability to recover, because you do have an extra thing that most of us don't have, and that is a natural extra release in your chemical
yeah
makeup of upper.
yeah
And your normal is like at my best day.
yeah
And then so you with that naturally recover faster. So I'm saying don't
and
I
you,
needed 2 years to stop
and
because
more used to those feelings as well.
and open to them. You
Yeah,
journal, you meditate, you ice bath, you sauna, you train. You don't binge drink your ass off. You don't whatever. So
good.
good. I mean, a couple times a year it's real fun. Like, let's get real. Who doesn't like a long lunch?
There's been some times recently where I'm like, I could go have a blowout, but I'm just like, no, not yet.
Long
Wait.
lunch, man.
Yeah, long lunch, nice lunch. We got Dad's birthday coming up. Maybe I'll let the
Get out the bag.
let the top off.
But I suppose the thing with all of that is like, maybe it's like for this month of August, I'm so stoked, and I'm going to go home and I'm going to be like, hey, can you please, like, I had to say this at 32 to Lisa. These are my behaviors that are me showing you in behavioral form that I'm anxious, but I'm not seeing them. So when I'm on my spreadsheet at night, when I'm on realestate.com at night, when I'm going to bed late and I'm watching YouTube and I'm watching like only documentaries, or when I'm trying to tinker with my training program, or when
booking a
I'm
trip.
booking another holiday, or when I'm doing this or that, I am anxious, but I don't know I am. In that first 2 to 3 days when I am, catch me and tell me, hey, I know she does it. She did it last night. I noticed that you're a bit like this at the moment. And I'm like, I am. And I came up in this morning and fucking blew the head off 2 team members because I had the shits. And I'm like, that had nothing to do with them, but they just got that. And I'm the biggest idiot out of anyone listening to this. I'll tell
Do as I
everyone that.
say, not as I do, right?
100% idiot. But I will also say that, like, it's okay to go home and go,
Have
hey,
boundaries.
can we just please not talk about anything work or property related for this month to recover? And then next month, let's sit down with the drafty and see what we can do.
And celebrate, because like we actually settle on the sale of the property this month as well, and our bank account is going to go up massively. And like, you know, as you said, like it's been a journey with these higher interest rates and all these projects, and it's like there has been times where it's like we've got good buffers because we're not idiots, but at the same time, you know, those buffers have been dwindling, and it's like finally let's just have a month of celebration, you know, being us and enjoying it, and just, you know, enjoy what I mean by enjoying it, enjoying the fruits of our labor, and just being like, you know, we did it. And then obviously having that time, and then when the thought comes up, being like, you know, I don't need that right now, it's not serving me right now, it is a time to rest and recover.
I've been
But we'll
doing it
get off this
week,
one, and
right?
we'll probably end up planning for whatever I'm going to end up doing next.
Do I regret continuing to take action at 32 now that I'm 40? No,
No.
because at 40, I'm where people work towards their whole lives. At
Exactly.
32, you're where people work towards their whole lives. If you stopped, you're good. Now,
That's
like,
the financial piece.
you could go to 3 days a week now, 2 days a week, done forever. But it's like, you know, sitting on a beach is really fun. I did it for 6 months. And then I realized, actually, what's the point of me knowing these things if I'm not helping everybody else get there?
Yeah.
And I just, you know, I wouldn't have listened to anything I said
It's
at
lonely
25
too,
to 30.
wouldn't it be? Like,
It's boring.
yeah, lonely. Nobody's there to celebrate it with you.
I was there every day with my family and had the best
I
time
guess
ever.
that's
Like,
it.
I can sit on a beach for the rest of my life. I just want a combo of both.
I've just got to work through my imposter syndrome, and then maybe I'll be able to enjoy it a little bit more. But look, I love having these, but both you and I know, because we're brothers, we can explain it. And obviously everybody listening to this, whoever still is, don't have the context of, you know, knowing one another for
Oh, of
32
course.
years and knowing everything about one another. So there's so much more obviously to it that we aren't willing to share on a public podcast, but we try. And
We're just
we're
trying.
going through the same things that everybody else is going through. We're just lucky to have each other.
Yeah, 100%. Like, if you logically think about the year you've had, I can't believe you're as functional as you are right now still. It's incredible. It's because of the way that you look after itself. It's because of your faith. It's because of your values. It's because of how healthily you leave the work phone at work. You leave the work emails at work. You go home. You socialize super regularly with people that you love. Like I really aspire. The way that you do self-care would be a dream for me. Like I wish I could look after myself consistently as well as you are. And I think it creates a safety net and light constantly around you. And it is a buffer. And I think these are just sharing ideas, but it's so cool to talk about growing as a human being as well as growing your wealth. And I think they're interlinked so much so. And I'm super excited for you to be able to come on here in 3 months and go,
This is what I'm doing.
yeah, this is what you decided to do post getting to think on it for a bit.
Let's take everyone through the journey as well.
And if it is like Harvey Bay, Toowoomba or Gympie for the next 18 months, so be it. Like, let's roll the dice and see what happens. And that would be really fun to document. And if it's not, it's because, like, for whatever reason, you found something even better that serves your family more.
That's right. No, that's right. Love it.
Heaps exciting, man.
Thanks, bro.
Cheers. G'day guys, my name's Ben and I'm the director here at Pumped on Property, and I just want to say a massive thank you for watching our content today. Now, if you're thinking about buying an investment property in the next 3 to 12 months, then the team and I would love to offer you a one-on-one strategy session. In that session, we can talk about exactly where you are right now, where you'd like to be longer term, and we can deeply educate you on the Australian market. And then you can take that information and go and absolutely smash it on your own, or potentially become one of the small number of clients that we work with each week. To book your session, all you have to do is go to www.pumpedonproperty.com and click that book your free strategy session button. But either way, we wish you all the best on your journey as an investor to financial freedom.